Good morning, everyone, and happy Monday. Today is February 2nd, 2015. It is 10:57 a.m. Eastern Standard Time. My name is JR, and welcome to my gold and silver video analysis. Okay, today we'll go over gold, silver, the Dow Jones, and I'll try to throw in platinum and palladium if we have enough time. I'm going to try to make this a fairly quick video. Okay, so currently testing this level here. If you guys saw my last video, I did say we might find on the weekly chart resistance between 1305 all the way up to 1322. That will be your sell zone, right? Now the market is looking very bullish, so again I would have taken the sell, but I didn't, simply because again just a very weird market. A lot of fundamentals, a lot of positive fundamentals for the precious metals, so I really didn't want to get in the way. Okay, this also being if you guys been following me here for some time, you guys will know that I mentioned that the second we went back above this level here, I did say that we are looking to target the high $13 area. Now we have this long-term trend to keep in mind. Stochastics are starting to point south. Okay, but we are currently above this 20-day moving average. Now, if you've seen my videos, you've heard me say this 1,000 times. You want to see the 20-day moving average coming down? That's bearish. You want to see it flatten out, and you want to see the market turn around. You want to see this 20-day moving average band of highs and lows. You want to see this turning around to the upside. That's how you're going to determine if you're going to see a change of trend. Now, as of probably the last couple of years, since 2012, actually since mid 2013, we have really just generally been trading sideways. Okay, and this looks like your band. It looks like we've been trading between 1185 all the way up to 1400, and it looks like that's probably what we're going to continue to do until we can break above this level or break below this level. Now, one of the reasons why I didn't like this short here was simply because these buyers are very much in control. Okay, you had a false breakout. You've heard me say this 1,000 times. When you have a false breakout, you usually have a move to the upside or in the opposite direction fairly quick, and that's exactly what happened. We had a break out from this. We had a break of this significant trend. I'm sorry, of this significant support level here at 1180. Okay, a move below this level here should have been much heavier, and we should have tested at least the 1050 range all the way up to the 1000 range. We didn't see that. We saw this market really just trade sideways for a little bit of time. Okay, went above this level, came down below this level, and finally broke out. So again, false move to the downside. This market, I do expect this market to move higher. Okay, this is your weekly chart. Stochastics are starting to go to the downside. So now I wouldn't be surprised. I wouldn't be surprised if we see something like this. Let me delete all these lines so we can have a better picture. All right, so I wouldn't be surprised if we see something like this, and you've heard me mention this before. You want to see this 20-day moving average band come down, want to go above this 20-day moving average, establish resistance, come back down and retest this 20-day moving average. At this point, we want this 20-day moving average to start pointing to, let's say, 2 o'clock or maybe even 1 o'clock. Okay, once this 20-day moving average is pointing in that direction, this should help this market find some support and create a higher high. That's exactly what we're looking for. A break of this long-term trend line here, okay, is most likely going to be nice and decent, and we're probably going to test this level here, the 1400 level. I wouldn't really, I wouldn't be surprised if we test the 1450 level, even though I think we'd be pushing it at that level. Going over 1450. I think 1450 will probably be a high of this year. Maybe 1430 to 1450 will probably be a high. Who knows? With the current fundamentals and the Swiss bank, just with all the crap that they're going through, the Swiss bank, as well as the euro, as well as the Canadian bank, interest rates around the world. I mean, just fiat money everywhere. and it just doesn't look like anywhere. It doesn't look like any central bank is sure of what they're doing. The Swiss bank pegged the franc to the euro 3 years ago, and by taking it off the euro, they're admitting that that was a bad move. The European Central Bank is printing money starting in March. They're going to print 60 billion euros between March and September of 2016. That they're also admitting that their previous QEs have not worked. We have interest rates at near zero. Real interest rates are actually negative. But here in the US, we have interest rates at near zero. And the fact that they've been at near zero for the last 6 years, that's really the central bank admitting that their policies have failed, because if they had worked, we'd have much better, a much smoother economy, higher interest rates, real savings, and so on and so forth. So let's get back to the technicals here. So what am I looking for here? Okay, this is what I'm looking for. I'm looking for a move above this 20-day moving average. Got it. Establish resistance. Got it. And come down, retest this 20-day moving average, and create a higher high. That's what I'm looking for. Let's see if that's what we're going to get. Okay, that's on the weekly chart. On the daily chart, we've already seen this. We've already seen the move to the downside, go above the 20-day moving average, find some support, right, and go higher. Currently testing the 20-day moving average, and now what I'm looking for is a move higher. Very simple. This is exactly what I'm looking for. The stochastics are starting to move to the upside. Okay, so again, 20-day moving average coming down, flattening out, going up. That's what you want to see when you're looking for a change of trend. Okay, so as of now, the daily chart looks bullish, but if we do fall below key levels, like let's say this level here, this will be, let me erase all this again. Now this is what we're looking for. Let's say if this market decides to correct a bit, we're not necessarily in danger. I think what we want to do is we want to, the short-term trend, the short-term uptrend has already been broken. We've already broken this level. Now we're holding on to by the 20-day moving average, but we can technically find some support around this level here. All right. This level here would be a level of support. This level would also be a level of support. Again, I wouldn't want to see this market fall below 1200 at this point, right? We're at 1272. We don't want to see this market fall too far down because, again, this is where this level is the level where we saw the false breakout, right? Or this level here, right? So if you look at this level, we came down below and the market immediately recovered and went above. So this is the false breakout zone here, okay, especially around this 1180 zone. So you don't want to start testing these levels because the market the technicals can start to break down, okay? But the market looking really, really, really nice as of now. Silver market right now, very good uptrend here on the daily chart. This is your uptrend. This is your support zone. Currently testing the 20-day moving average. You saw the 20-day moving average coming down. Here it is. You saw it flattening out, and you saw this market now, this 20-day moving average starting to move up. So that's exactly what we want to see. So far, so good. Stochastics right now looking a little bit overbought, oversold. We might see a little bit deeper penetration in this zone, but this is a great zone to get in. And again, you're looking to create higher highs. The next target would probably be somewhere around $19. You can also do a fib level here, a short-term Fibonacci retracement level. Okay, that would be something like this. So this would be your target. 1880 would be your target. Okay. All right, that would be your target. And of course, we'll see what happens. But that's your daily chart. So the daily chart looking very constructive. For silver, at least, really nice right here. Very nice buy zone here. But it does not align with the weekly chart. The weekly chart suggests that this will be your zone around $16. Currently above this 20-day moving average. Very nice. Okay. Establish resistance. Come back down. Test this 20-day moving average, which is currently doing. Now we need to create a higher high. All right. Let's see how this plays out. Okay. Stochastics on the weekly looks a little bit overbought. So we have a really big candle here. That candle is no bueno. But we had a candle here, which didn't really suggest too much, and then we had another big bearish candle here. So none of these candles meant anything, and we're hoping that this candle is not going to mean anything again. But you definitely do want to keep an eye on that. This could fall to this level here, $16. I would say a move below 15.50. And, you know, again, silver is, again, in trouble. Okay, let's look at the Dow. Okay, Dow, let's look at the daily chart, because on the daily chart we have this broadening formation drawn out. Tested this level here, and now we are moving down south. This is your support level here. This would be your last level of support right here. We tested that level this morning. We were at 1140 was the low, 1138. Currently trading at the top of this zone. I guess technically we've already broken this zone, but we want to see a close below this zone, because this is a really nice solid zone. And I know this because look at the huge candles on here. So there's a lot of buyers here in this level. This also was a confluence here with the Bollinger Band. So because it's a confluence with the Bollinger Band, this is a good area to buy, and seeing if you can take this market a little bit higher. But again, that's not my suggestion. I wouldn't suggest to buy in this broadening formation. This is a bearish formation. I said this time and time again. This is the weekly chart. So I would probably say sometime in the next coming weeks, probably by March, I would expect this thing to test at least the low 16,000, the high 15,000, at least in the next month or two. Okay. If this turns out to be a false indicator, then this market will continue to go higher. Right? That's your daily chart. Let's look at the weekly chart. The weekly chart still very much in a bull market, right? I mean, you can find all different types of lines here to make this match. But really, this would probably be, I think this would be a game changer. I think a break below this level here would definitely be a game changer. If this market, if this market manages to fall below the $16,000 mark, this trend will finally be broken, because you can fall slightly under it. That's not a big deal. You can come down over here, let's say to the 16.4, 16.3 range and recoup and come right back up. But we don't want to see a move below 16, and we don't want to see a close below 16, because a close below 16 would suggest that this long-term trend that's been intact since 2011 has finally broken, and it does suggest lower prices. And I guess, I mean, you know, you can say the market, you know, we have plenty of support and so on and so forth, but you know, the fact of the matter is that this is not a good indicator here. You have higher highs and you have lower lows. You have basically another broadening formation. This does not look positive. This looks very bearish, and eventually this thing is going to break. Now this is scary right here. You see this? This on the stochastics down here, this finally broke the trend. So is this the beginning of a huge move to the downside? I don't know. Just like I said with silver or gold, maybe you have a big bearish candle here. 3 big bearish candles, which were all ignored by the market. Will this one be ignored by the market? I have no idea. But I can tell you that this market has not taken a break since 2009. I mean, just a superb rally here in this market. I mean, look at that rally. This thing is just going straight up since the low of 2009, which was roughly 6,500. This time, I would expect the market to come back down here. Will the market come down here all the way? I don't know, because maybe when we get here to 14,000, or maybe when you get to 13,000, or maybe even 12,000, maybe the Feds will say, hey, enough is enough. Let's put more quantitative easing. And in that case, then the market will start rallying back up. But the way it looks, I mean, these guys ended QE at the top of this formation, and it usually works out that way. So I don't know. This doesn't look too positive for me. I'd like to see what's going to happen. But again, your 20-day moving average still very much intact. Still looking at around 1 o'clock or 2 o'clock. That's still very positive. That's on the monthly chart. Again, that chart can take quite some time before it breaks down. This is your weekly chart. Your 20-day moving average is beginning to flatten out. It actually flattened out back here. You had a little bit of a flat sideways move. And since then, it's really just been moving up slightly and is starting to flatten out here. That's what it looks like. So again, we have to be very cautious here, okay? Very, very cautious. But it does look like you'll find some support here on the 16.5 zone. That might be a good, if you haven't gotten in and you want to take advantage of this rally, this might be a good time for you to get in and seeing if you can create a higher high or at least just take it up higher. But again, that's up to your trading plan, okay? Let's look at platinum now. All right, let's look at platinum here. Platinum trading at 1224. Platinum is a great buy. What a phenomenal buy here for platinum. The reason why I feel so strongly about platinum is because platinum usually trades higher than gold. Gold right now trading at 1271. Platinum right now trading at 1224. Just a gorgeous buy here for platinum. You can trade the ratios. You can trade the ratios. You can short gold. You can buy platinum. Buy the exact same amount, and that'll be a great trade. Just let that hang. I mean, even if you have to leave it for 6 months or a year, that's just a phenomenal trade. Usually usually platinum is trading at least 1.5 to 2 to 1. So you should be able to buy 1 ounce of at least 2 ounces of gold, or at least 1.5 ounces of gold with 1 ounce of platinum. And right now the price of gold is actually higher than the price of platinum. So just on ratios alone, that's a good trade. Now also, I also see a pinch here, okay? This is a bullish pattern here. You can look at it like this, or you can also do this as well. And then you can do this. Now it looks like this is beginning to be a pinch. And what you might see is you might see platinum, let's say, come up here and then come down and then spike. You guys have seen me. Let's see if we can look it up for you guys real quick. This is called this wedge. Here's a descending wedge. So it looks like a descending wedge here for this platinum. And usually these wedges, this is how they play out. You see a spike. So usually you see the wedge and then it breaks out to the upside. You see the wedge and then it breaks out to the upside. Every so often they'll do this, but for the most part, this wedge is an indication. This is a bullish sign, right? So when you see a wedge, kind of like what we're seeing here in the, oops, I took the chart out. Let me put it back. It's starting to look like a wedge. So you might see maybe something like this. I mean, this market is already below production costs. You know, you might see a test of the $1,400 range and then maybe a breakout from there, or you might see further move to the downside. But again, as of now, this is a fairly positive formation. And what we need to do is we need to surpass this 1,300 level, 1,350, 1,400. I think once you can get to 1,450, I think you confirm that the breakout is going to happen. And you would expect to move at least to the upper 1,700 area here or to the 1,850 area. That's the move that you should expect once this thing, if this formation is a descending wedge, okay? And that's about it, guys. I hope you enjoyed the video, and good things for this market. I'm going to do a fundamental video where I'm just going to talk news. I'm going to try to knock that out maybe sometime this week. But a lot of negative things out there in the market. Just a lot of extreme negative fundamentals. You know, from the ECB, from the European Central Bank, all the way up to, I mean, just all central banks in general, and our current economic state. Some of the earnings that we've seen have not been good at all. I think the only company right now getting some praise is Apple, but besides that, everyone else is just a mess. So I think the market is finally going to see a change. Maybe we won't necessarily see it today or tomorrow, but I think this is starting to develop into a bull market. What we don't want to do is we don't want to fall below this level here. Obviously, if we fall below this level, then maybe the bear market is not over. Some people are already stating that this market is back, and that the bottom is in. If the bottom is in, then anywhere you buy, you're going to make money anyway, because this market is just going to start going higher. But again, guys, I'll just briefly show you a couple things. This is a weekly chart here for gold. This is a chart here for the yen, right? Look at this, almost at record-breaking highs here at 157,000. You know, obviously nominated in Japanese yen. This is what happens when governments print too much, and now they're saying that the Bank of Japan might print even more money. So this is what gold does, right? This is a beautiful chart. This is an uptrend, right? You get a little bit of disruption here, but for the most part, this is an uptrend. And you're going to have corrections. This is a nice chart. Let's look at another chart. Let's look at the euro versus gold. Another beautiful chart. Look at that. That's a beautiful chart, right? So we tested this level, and look, they announced that they're going to print more money, and look what happens. Just a phenomenal breakout, right? So this looks like it's going to test, and this is the problem with gold. The problem with gold is that you can say, okay, you know what? Let me wait until we have a bull market established. The fiat system, the world is nominated in fiat money. So when people don't trust their money, they dump their money and they go into real hard assets. And gold is a real hard asset. Fiat money is nothing. It's trust. It's trust in politicians, trust in government, trust in policies, and none of those things have ever worked. Why would they start working now, especially when we're in debt 18 trillion? So this is a great time to start accumulating your precious metals. You're gonna wait maybe a year, you might wait 2 years, who knows? But the fact still remains that all the evidence points towards gold always maintaining its value, always maintaining its purchasing power, and always maintaining its ability to be the safe haven when nothing else can be trusted. Okay? So guys, I hope you enjoyed the video, and I'll see you guys next time. Bye-bye.